Welcome to another episode of Elementality, everybody. Here with Carl Richards. Am I your host, Reese Harper? Carl, I was just we're dialing in from Topo Chico headquarters here in Salt Lake City, Utah. Apparently, Topo Chico's since 1895 bottled at the source. I just realized that.
I've been drinking it for 120 years.
I thought this was like a trend, a more recent trend. I've been seeing them more in distribution. Yeah. I think maybe some rich venture capitalists acquired an old. Oh, they did?
Yeah.
All right. And then they
almost stopped drinking it because of that, but I've continued.
Love it.
Yeah.
1895. I've been here giving us carbonated beverages ever since.
Yeah.
If any of you'd like to come and join us here at Topo Chico headquarters in Salt Lake City, Utah, you can reach out to Topo Chico and let them know that we're using their bottled water at the source, and we're looking for sponsors for the show. Right?
Exactly.
Have they ever called you and said, "Hey, Carl, we heard"?
No, I'm still waiting for Howler Brothers to call me too. The T-shirt, the shirt company. So and Sharpie for that matter.
We can't get anybody.
You can't get Sharpie to sponsor me.
Okay, well, we've had a good series so far on kind of if you haven't tuned in, make sure and go back and listen to this kind of in a series. We had one, our first episode kind of outlining the problem that we see, anxiety and stress in the industry or in around people's finances as being a major source of the main problem that Carl and I feel like financial advisors can address. Then we talked a little bit about the blue ocean out there, the market of untapped people that we still really have the biggest impact to make in our careers on these, people making anywhere from, you can say half the, households in America at 75,000 or up in income. You've got another 25% of 120 million households making between 36 and 75,000. There's just there's a lot of people out there that we can have an impact on. Today we're going to talk a little bit about the things we would have to do to reimagine how to address that market. Right. That's not been something I think the industry's put a lot of time into. Carl and I are really passionate about this, and kind of was the reason I think we came together, is exploring how do you address the needs of a market where you have to bring the cost to serve down. Mm-hmm. The cost to serve right now is largely based on the needs of the top, 0.5% of income earners, the 1%ers, the quartile of 1%ers. You could argue when advisors in the 80-20 rule kind of, it's probably the top quartile of 1%, just because the needs that they're focused on, the technology stacks, all the things we use, they're really geared to the highest revenue producers in our practices, which are generally, 80% of our revenues come from 20% of our clients. Yep. And if advisors are working with 9 or 10 million households, plus, if you use CFPs as a proxy and give each of them, let's say 100 households, your revenue is really probably coming from the smallest part of their books. Yeah. And I know that's the case in a lot of practices I've interacted with.
Yeah, for sure.
So let's just talk about that problem a little bit and the types of things that are costly and different ways that you've thought about and that I'm thinking about and that we're thinking about at Elements to sort of bring down the cost to serve to a larger block. What's the first, I guess, couple of things that come to mind for you just around this topic in general?
Yeah, I was just thinking about the need to just question these assumptions about the things that we do, right? And one of the experiences I had is I remember when I first started, it was probably a year or two into having my own RIA. So I'd left the big brokerage firm with a bull as its symbol, but we'll go unnamed. It's now owned by a bank. Mm-hmm. And I had started my own firm, and I, of course, sent out quarterly performance reports.
Yeah, that's what you do.
Because that's what you do. And it was so important. And I remember telling everybody, we sent out quarterly performance reports. And then about a year into it, one quarter, I forgot. And I realized that on a weekend. I was like, oh no, those were supposed to go out Thursday. It's now Saturday afternoon. Oh man, when I get in Monday, I'm sure, because they all went out by email, right? Like we had stopped delivering them by courier pigeon. So I was like, oh no, there's going to be so many mad emails. And I got back to the office and there was exactly 0 emails saying like, where's my quarterly report? So I waited another day, no emails. And I realized like, wait, nobody was born thinking they needed a quarterly performance report. Like, we created that problem.
Yeah.
And now we're trying to unwind it. Like, hey, don't think short term, and I'm going to send you a quarterly reminder not to think short term. You know what I mean? Like, so I think the first, so I forgot the next quarter. And the next quarter, and then I changed what was that form? Is an ADV form?
Form ADV.
I changed it to performance report available on demand instead of quarterly. Nobody cared. So that's I only tell that story to like as an example of I love thinking through what can I delete, what can I delegate, and what can I do. And the delete thing is really crazy how much that's just in our heads.
Yeah.
Right? Like, so the amount of time that we spend on certain things that we might have thought they were really important for this top group of people that we serve as an industry. They might not even be important to them. But let alone if we rethink, like, what is the service offering? And I had a friend, his name was Kevin. He was at one of the big firms I worked for. And Kevin was super successful, and he didn't do all these other things. He didn't send out anniversary cards. He didn't send out birthday notes. And I finally asked Kevin one day what he did, and he was like, we provide rapid response to people's questions. That's it. Like, we don't spend any time on anything else. If people call and they have a question, we get back to them and we answer the question. So those are just two stories to like push the envelope a little bit as we start. Like, what are the things that really matter? And what is the cost of doing business? What can we delete? What can we delegate in the form of automate? And then hopefully that pile that's left for us to do is much smaller. And what can we right size?
Yeah. Yeah, I think those are all really good insights. You always have like you seemed like you might have done a podcast or two on different topics. You seem to have like the perfect story for like everything. It's great. And the I think we call those the 3Ds. Is that what it is?
Yeah, I don't know if they have a name, but the delegate,
official 3Ds.
Delete, delegate, do. And by the way, I'm sure that's not my idea. I have no idea whose idea it is, but I'm
Tad
sure
Henderson's, our producer here in the shop for us, may have brought that up.
Yeah.
So the delete one, I think, is a lot of where I've spent my time thinking, because, and, a quick aside, when I was building my firm, I've talked about this a little bit in a previous episode, but we went after dentists, generally, which subsets of that market are like orthodontists and oral surgeons, but these dentists are not the highest income group in the world. The average income of a dentist is still under $200,000. It hasn't, despite the fact that they have the highest debt level upon graduation of any professional. Mm-hmm. They just don't have a lot of free cash flow. And corporate dentistry is now kind of like coming into the private dental market, and it's just creating pressure on wages and salaries and fees. And insurance companies have found a way in there, and they take a lot of the margin. And it's kind of an industry that's in a lot of pain right now, especially for new graduates. And we were trying to figure out how we can possibly address, the needs of a market that just doesn't have a lot of free cash flow and a huge pile of debt. And can I feel good, about going in and saying, you need a $5,000 comprehensive financial plan, and I need another $5,000 to $7,000 a year in a retainer. They have the pain, right? They have a ton of financial questions, like income-based repayment versus traditional refinancing. Should I buy a house? How much liquidity do I need to build up? Like, can I even afford to buy a house?
I just can't. I got to ask a question. Because to me, it's one of those assumptions. And I don't know the answer to this. Like, I'm actually only curious in questions that I don't know the answer to. Mm-hmm. So I don't know that there's a right answer. But one of the assumptions that I think needs to be questioned, and I certainly have questioned, I know you have too, is there a financial planning fee? Is the upfront planning fee, right, the right way? Does anybody wake up with a financial does any human wake up with a financial planning problem? Like, I think I need a financial plan today, right?
Well, I had this in exchange with a friend who I value a lot. I guess he's a digital friend, Cody Garrett. Uh-huh. And Cody spends a lot of time on creating content materials around the financial plan and
47 things.
Yeah. And it's I think a lot of advisors really value those resources as a way to solve questions and answer questions.
Yeah.
I don't think that the client loves paying a high amount for a deliverable that is a plan. And partially what I think you're getting at, and I think Cody would agree with this, and that's why he probably has so many different a la carte options, is that it's the client doesn't want to pay for something that that isn't their question right now.
Yeah.
I have a question, but I don't want to prepay for all the possible questions I could have.
Yeah.
I just have one. And are you going to answer that, or are you going to force me into a bigger engagement? I think that natural pain is there. Totally.
And I think it's important to understand that I don't, because every time I broach this subject, I love talking about this, like the plan versus, I'm not saying that you should give away your value. I'm saying that sometimes we misinterpret our value. The value wasn't in building the huge plan. The value was in answering the question. And almost always clients have an acute problem. And we see this over and over and over, that people engage with a financial planner and then they're dissatisfied. And when you ask them why they're dissatisfied, they say, because I didn't get an answer to my question. I got a plan, but I didn't get an answer to my question. Or the plan, the one that we saw in Russ Allen Prince's book, Private Client Attorney, they did that huge survey of high net worth clients that had hired attorneys. They had paid, I can't remember what the number was, but they had paid a substantial amount for an estate plan. And we all know this. They didn't do anything with the estate plan.
Yeah.
That was the population. The question they asked was why? And I can't remember the number, but it was over 90% of them answered the estate plan didn't reflect what I wanted. Like, it didn't reflect my values.
Yeah.
So sometimes we get that confused. So I think one of the first things that's interesting to push on is the role of the plan, right? Because that does take a lot of time. Well, why do you need the plan? Often you need the plan to answer the question, right? At least that's your perception.
Yeah, I think it's fair. Like, I've got a strong opinion about this that may not be, my opinion is that the plan originated from a place of trying to make money. It wasn't addressing.
Well, I think that's important. I mean, I've just got to comment on this because I think there was a moment, I remember this moment because I was a CFP relatively early on in my career when everybody told me it was stupid, and I was attending FPA retreat, and there was this core group of people who were like real good planners.
Yeah. That
were like, they're a secret little society of real good planners, and they were doing it for the right reason all the way along.
Yeah.
But what you saw as an industry, which I would say represented the bulk of what you saw, was exactly what you're saying, is it moved from I'm a stockbroker, I'm a life insurance salesperson, to the plan becoming the product that I'm going to sell.
Yeah.
But there had always been this little group, Dick Wagner and all those early pioneers doing that thing for the right reason. But the bulk of what the public interaction was somebody who had been selling a product now is selling a new product, and the new product is called a plan.
Yes. And I used to, I'm coming out of my career was selling a product to selling a plan to realizing that the plan actually was not allowing me to address the needs of a lower income, larger population group. Yeah. I mean, I couldn't go I could do a $5,000 to $10,000 plan with some people, and it really wasn't a plan. It was just like that bought like 25 hours of my time, which were required to address the plethora of complexity at this high income part of the market.
Right.
But then I would bump into people that were like, okay, I was like forcing myself to sell a plan, right? Yeah. Forcing myself to sell a plan almost because it was the only way I knew how to engage with somebody. And then what we've started to realize, and that the reason Elements kind of started to, the first step of Elements was like, I kept meeting like 9 out of 10 people just wanted to have a question answered.
Yeah. Yeah.
But I was like, well, I can't afford to just like answer one question. Then I've got to go get another client to pay me another like a few $100s for a question to get answered.
Yeah.
And am I going to charge $1,000 a question? Yeah. They wanted an answer to a question, and my solution was, well, I've got to give you something more than that, or I can't afford to work with you.
Yeah.
And I just don't think technology was at a place, hasn't been until now, where we could actually think about this more holistically. Now we can actually say, all right, we know that most people, when we say comprehensive financial plan, if you want to mandate a comprehensive financial plan on somebody from the top down, like CFP board down, ADV down, you're going to price people out of the market. Yeah. Like if you're going to mandate like a full comprehensive financial plan, input by the advisor, created by the advisor, done through, inquiries of one-off consultations over 4 or 5 meetings, like the cost of that is just going to make it impossible for most people to engage. And they won't engage because that's not a pain they actually had to begin with. It'd be like if you went to a doctor's office and you went in and said, my knee is really hurting. And they're like, well, there might be referred pain in your back and you might have some trauma. And so we're going to have to do an exam, an MRI, a full blood work panel. I'm going to have to look at your cholesterol. And I know it's just your knee right now you have a question about, but like I can't answer the knee pain until I do everything else. Yep. Now, it'd be nice if I could have all of that analysis, and you could give me more advice than what my current pain is. Yep. But like if you don't address my current pain, I'm probably not going to, I'm not going to pay for 10 times my current pain. Yeah. And so I guess that's where I got stuck and started wanting to innovate more with Elements. It started with that question of like, do I like why do I feel like this guilt around covering everything? Like my team was like, I'd be like, well, I don't think we can afford to cover estate planning right now, guys. Like this client, right. We got to leave that out. Right. Or we have to leave out all the insurance analysis right now. Yeah. Or maybe we can only do the insurance analysis because they're so young. I'm so worried about that. Or we can't handle talking to them about anything to do with their business life. Right. Like it's I know they want that, but we have to discover the current pain and kind of try to understand if we can price accordingly. Yeah. And we're not talking here about the people that have plenty of discretionary to like just hire you for everything and do whatever you want. We're just saying most people to be interested in talking to you, we have to start with like the cost here. Yeah. Yeah. And why do we feel the obligation to be like, it has to be comprehensive and it has to be comprehensive for everyone?
No, I was just thinking of the doctor, like just I could feel myself as you were just like, no, my knee just hurts. Yeah. But I do, but it is true. I need to know like what else, but there could be like, they're so interesting to me. Like, what's the minimum level of information that I need to get to answer the question you have right now? That's the acute problem you have right now.
Yes, that's it.
The acute problem. Now, I know, of course,
there's more.
It depends, and it would be better if, I can't answer how much you should put down on your house if I don't know whether you have life insurance. Okay, fine. Like, so sometimes like this desire we have, and we've done this to ourselves. And by the way, like huge empathetic hug, because this is all well-intentioned. Like this is all us just trying to be the best we can and serve the best. But the standard we've painted is like, I've actually tested this. I used to do this little trick on people, and this is all about investments, just because it was the easiest way. I designed this trick. I would go to lunch with people who, like, these are, chief investment officer at XYZ, not XY planning, but just like I'm using the metaphor XYZ, right? Maybe I remember doing this at the founder of a giant mutual fund company that you'd all recognize. I did this with a giant custodian that you'd all recognize. I would wait till we were just about done with lunch. This was right when I was writing one-page financial plan. And so this was kind of research for the book. Mm-hmm. I'd wait till we were just about done with lunch. The check had arrived. And I'd say, hey, before we go. I remember particularly doing this with somebody named Jared. I was like, hey, before we go, Jared, my mom just rolled over her 401k to an IRA. How should she invest it? And that was intentionally designed to watch the angst boil up in somebody like Jared. Like, this is a CIO of a big firm. And Jared, well, it depends. Oh, no, I know it depends. But like, we got to go. And I just need to tell my mom how to invest the money. Well, no, I can't. Like, and you would see this, like, and I would just keep pushing because it was just an experiment. I'm like, no, Jared, like, seriously, I just need to know, like, my mom, like, you're in the industry. Just tell me, what should my mom do? I can't. Like, you'd almost blow a fuse.
Yeah, I can't give you the answer.
Because I just need to get the perfect answer. And I think what we're driving at here is often like, well, can I give people an answer that will actually just be helpful and it may not be perfect? I love Jack Bogle's quote on investing. And he was basically pointing at taking your age minus 100 for your allocation, that whole super simple thing, putting it in index funds. And he said, look, there are ways that are better to invest, but the number of ways that are worse are infinite. And I love that idea of just like, can we get a little better at getting somebody, look, if somebody comes to you and says, how much should I put down on my house? And you take a few minutes to figure things out, the answer you're going to give them is 10 times better than the answer they're going to get from anybody else.
Yeah.
Even with limited information.
Yeah.
So I think that's more about like right sizing the information that we need to solve an acute problem so that we can do it for more and more people. And then are there tools and tech that we can blend in that will make that even better?
Yeah. Well, we'll have plenty of time to keep chatting about this. I'm looking at, I think it's interesting for me to look back at what the scorecard was all about. Just the scorecard at Elements was, I have to figure out a way for someone else to estimate, not get exact, not data linking,
right.
Not like precision, just estimate some kind of numbers that I can trust as approximate place for me to start orienting. In a similar way to how, there is like a baseline of there's a baseline of information you need to know if you can answer a question responsibly. Like I think I mentioned in this episode, this conversation with my PT, and she asked me, hey, how much should I put down on my car? Right? I'm trying to buy a new car. How much should I put down? And I used that. We hadn't engaged at all.
Well, wait. So, because the normal answer would have to be, well, it depends. If you'll come spend 2 hours with me, I'll fill out this 200-page intake form, and you can do that like we'd have to build and pay me $5,000, and I'll get you an answer how much you should put down on your car.
Yeah, or I might throw out even like, you'd have to, you're gonna have to pay me, or I don't know.
Yes.
And so.
Sorry to interrupt.
It's okay. Like that was her question, because I wanted to test this because I'm trying to practice something you and I have been working on, which is figuring out the financial question that someone has that day.
Yeah,
I think is the way for you to get them to engage.
Yeah,
whether they have an advisor or they don't have an advisor, just figure out the question they have today.
Yeah,
and then figure out how to answer that question. So with her, I could have said, well, the cheapest way for me to do it would have been guessing at like her financial statement and guessing at her income, and probably just saying, I probably wouldn't put any money down on the car because I believe in staying highly liquid, and at your income level, I bet you probably could use the extra cash in the bank. That was my gut feel. But if I said that to her, she would immediately discount it as not informed enough,
right, and
being reactionary. So instead, I said, have you ever heard about the scorecard that I use to track, financial health, like vital signs? I'm like, there's one score on there called that I call liquidity. And it just measures the number of years right now that you could go on your current spending, the way you spend normally every month. Do you think you have a year's worth of spending, right now in your bank accounts and sort of after-tax investments that you can get access to? I could just see her sit there and thinking, and she's like, I've never actually looked at that. I said, well, the answer to that question you asked me would depend on your score in that area. Mm-hmm. And she just lit up. She's like, I think mine might be like a 0.5 or 0.7. I'm like, 0.7? I'm like, that would be very different than if it was 0.5 or if it was 0.25, right? We got 3 months, 6 months, 9 months. I'm going to give her a different answer based on what she tells me. And that unlocked her mental model to where she was like, well, how can I fill that scorecard out?
Right.
Like, I would love to have you answer the question
Right.
in the context of my information. So now I've empowered her. I just sent her an invite to the Elements app off my phone, and she filled out her whole scorecard over the weekend and texted me and said, I'm done. And I looked at her scorecard, and like it only had like 5 of the numbers on there.
Right.
She forgot to put in her spending, but she put in her income and put in her financial statement was perfect. She literally filled out her whole financial statement perfectly and put in almost all her scores, and she just missed estimating her spending. So I just said, estimate your spending, and she did it. And then I just drew a circle on screen, took a screenshot, sent it over to her, and answered her question in an audio note in 5 minutes. And it was done. And she said how much
good enough.
It was good enough,
Yeah.
but it was good enough for 2 reasons. It's good enough because it was cost effective and efficient for her. She could afford it. I did it for free, but she asked me how much do I need to pay you for that?
Yeah.
And if she would have paid me $50, I'd have been like feeling like I was like very profitable. You know, I probably have been happy for $20 to be honest, because it didn't take me longer than like 7 minutes.
Yeah.
I don't know, 6 minutes.
Yeah.
I already knew the answer in advance.
Sure.
But by bringing her into
there's a whole game with
there's
that.
a
It's
whole
important.
like righteous trick there of getting someone to come in and be like, hey, finances are bigger. See these other 12 indicators that you don't yet know about? I'm going to explain them all to you eventually. But just for this one question you had, it depends on one thing. And this one thing, I don't need to ask about everything else. And I'll answer your question. Yeah. That's what we've got to get to, is getting get to the question faster, but don't answer the question until you teach them something about the context behind that question. And that's where this scorecard for me originated, was like, I've got to bring someone into this. Good. So it felt great to like know at that moment, I have earned the trust of this person, and it only took a few minutes.
Yeah. And help somebody. And
really meaningful.
if it was a business that had been built specifically for that kind, it would have been a profitable experience for you, amazing experience for her, got the information she needed, answered a question.
And what else is happening in a month, probably?
Yeah, exactly. Like, I've got another question and or how do I more formally engage? That's exactly what I'm talking about.
Yeah, man. I just think that's our blue ocean. It's really important, I think, to get to the place where we can meet the bulk of the population where they're at. They want a question answered. They do need to have some skin in the game. Yep. There's a lot of ways to monetize this, and we haven't got into all of that. But there's a lot of ways to make money. We just can't. Like, are we really going to say that because I didn't go through the comprehensive CFP process with this person, that she was worse off now?
Yeah.
Like, the analysis I gave her allowed her to keep some liquidity in the bank and have a car payment that was probably $42 more a month.
Yeah.
That's like what happened. And now she has literally like 4 months more of liquidity.
Right.
To go towards some of her future goals and her current other key goals that she has. Yeah. And it's like there's no way that this person would engage on something more robust and more comprehensive. It's just not. It's not within the scope of her current.
And no one would have been able to help her.
No.
So letting go of perfect. Were there better ways? Were there better answers than the one you gave? Of course. But the number of answers that are worse are infinite. And she got an answer. Mm-hmm. Yeah. Amen.
I'd probably argue that the answer she got, too, was purpose fit for that situation.
That's exactly right. Like, I think it's better than we're not talking about financial planning light here.
Yeah.
We're talking about purpose fit planning or right size planning.
All right, guys, keep dreaming. How can you lower the cost of getting to these people and helping them out and having a huge impact? That's the exploration. So thanks, Carl. Appreciate it.
Amen, Reese.
Carry on.